are getting ready and getting prepared for talking taxes. We've been getting you ready for tax day, April 15th, all week. It's now less than 2 months away.
And so all week we have been privileged to be joined by Jon Karp, tax partner with the accounting firm Whitley Penny. He's been here answering our questions all week long, telling us and telling you how to be prepared.
Yeah, so Jon, thank you again for being here. 5 days in a row. You're getting used to a different alarm clock schedule for sure.
Absolutely. I think my car might like the break, though.
Yeah, I do. That trip from Dallas to Fort Worth gets old real quick. Okay, well, yesterday we talked about tax deadlines, tax bills, tax refunds. Today we kind of want to wrap up the week by thinking about what can we be doing this year to maybe decrease our tax bill next year or even increase our refund. So what are some suggestions or some steps that folks can take?
So let's start with the increasing of the refund. So if you think about increasing your refund, if that's what you're looking for, you have up till April 15th to make a few decisions. And two of those decisions are if you're eligible to make a contribution to your IRA account, that's a tax deduction, right? And then that could be worth a couple $1,000s of a tax deduction. You also have the ability to make a contribution to your HSA account. Now, let's say you're not eligible or you've already done that, but you want a budget. Well, you can begin to make those contributions now towards 2024.
Gotcha.
Right?
That's great.
So you can get ahead of the game.
Ahead of the game.
We've been asking the viewers, Jon, also to weigh in this week, and you've done a great job answering their questions. And we have a question today, and it comes from Mary. If we can see that question from Mary. Mary states, I filed my taxes but won't be paying until April 15th. Meantime, I decided to roll over from a brokerage investment to an IRA and a Roth to help my tax situation. Do I need to file an amendment with the IRS?
So, Mary, in answer to your question, I really don't know. So I'm going to try and answer it to the best of my ability. What becomes very important to that question is the dates, right? So when did you execute this? So if you executed it in 2023 and your goal was to have a tax-deductible IRA contribution and you had employment income, then yes, you probably need to amend your tax return. If you did that in 2024 and your goal was not to get a contribution to count that contribution for 23, then you can say, well, I want to count that IRA contribution for 2024. A Roth IRA remember, is not tax deductible. So the Roth IRA is where you put the money in today, you don't get a tax deduction, but it helps you tomorrow. So when you take it out when you're finally 59 and a half, if you choose to, or when you don't ever have to take it out, right? It's not subject to the required minimum distribution rules, and so it all comes out tax-free. So the one thing missing in Mary's questions are those dates, right? Because those dates are important to know what year that all happened in.
What about, we know that 2024 can hold a lot of things for a lot of people. Some folks may get even a medical diagnosis this year that they weren't expecting, and we know that those expenses can greatly add up whenever something like that happens. So can you deduct those expenses? Is that something to keep track of?
So the answer is maybe. So the way to think about that maybe question, or it depends, which has been my favorite answer all week, is that medical expenses are subject to 7.5% of your adjusted gross income. So if you really think about that in terms of what that means, that means if your adjusted gross income is $100,000, the only amount you get to count towards itemized deductions is anything over $7,500. So if you just take myself, if I'm single and I've got a $13,850 threshold to get to, well, it's only the amount of out-of-pocket expenses over $7,500. So now that can get pretty easy for some people today, especially if you think about seniors and teeth implants. So, because those are expensive.
Yeah.
Oh, yeah, they are.
Yeah.
Trust me, I have parents. Anyway.
I have parents too.
Not speaking from self-experience, Keith. We just want to clarify. Okay, meantime, we talked about a lot of different tax topics this week, and one of the things that you wanted to kind of rehash is if you get a letter from the IRS, what do you do?
So if you get a letter from the IRS, I think most people, it causes their heart rate to go up, they get really nervous, and they want to ignore it. I think the most important thing about getting an IRS notice is don't ignore it. There are really important dates in that IRS notice, and if you don't respond, you may lose some of your choices. And so the last thing you want to do is ignore that IRS notice, and you want to make sure you get professional help, and you want to take care of that. because the last thing you want to do is lose the ability to have choice or to even be able to do it, to make some elections, to change some things before they put a lien on your account. And we sometimes find that a lot of people ignore those, and then they send them to us 60 days later, and you have 30 days to respond to most IRS notices.
It's important to pay attention.
John, one thing that I hear all the time driving in at this hour on the radio is these ads of, we can help you with your tax problems. If you owe the IRS, call this number, and if you owe less than this, we can help you. What should people be on the lookout for rather than just calling blindly these numbers?
I think you need to use a reputable firm, and some of those firms are reputable, right? So I think I don't want to slander anybody, but I think you really need to use a reputable firm. In fact, during a break, if you remember, I was going over this case with you where there was a preparer who was fined $1.5 million for making up items on a tax return. So, you know, there's great tax attorneys, there's great CPAs, and even on the IRS website, there's a whole series that says, choose your tax professional carefully. They don't always get to save you money. And also, if you have an IRS issue, there's a taxpayer advocate service. And even though they work for the IRS, their goal is to help you. That's their deal. And so take advantage of what is the choices you have and the people that are there to help you.
And we know, we've talked about it all week, taxes are a complicated subject, and it's very overwhelming for a lot of people, which is why they ignore those letters that we receive in the mail, because it's overwhelming. But it is important to seek out a professional's help, and you were mentioning that there is plenty of free resources in the community that folks can tap into. Absolutely.
I mean, go to irs.gov. There's the voluntary income tax assistance that, or a lot of the public libraries in the DFW Metroplex. There's an 800 number. You know, as you so told us that you've hit ARP, Keith, so, right? But I beat you there, don't worry. But, you know, ARP has free assistance for seniors. And then most of them all have translators in foreign language. And so I think it's a great opportunity to get into compliance and not end up behind the 8 ball with your taxes.
Yeah.
John, I've always wanted to ask this question, especially for teachers in underserved and underrepresented community. A lot of teachers are so underpaid. They spend a lot of their own money on school supplies. Can they write those off?
They can get up to $300 per teacher. So if you're married, that's $600, and that is not subject to the itemized deduction.
Okay, well, that's something good to know.
So I also think, you know, since you brought up teachers, right, what happens towards the end of February and we're going into March, you know, it's kind of the slide to summer. If you pay for your child to go to a daycare, or not a daycare, but a day camp, and you haven't elected to be part of your FSA plans, that you can deduct on your taxes as child care, dependent care, which could be worth some money to you.
Yeah, for sure. Okay, well, John, we first of all just so appreciate you being with us bright and early every day this week. You've provided some great advice and wisdom with our audience. And if you've missed one of our conversations this week, we want you to head to our website. If you scroll down just a little bit, you're going to see that Talking Taxes icon. If you click on it there, you're going to be able to see all of our conversations with John, as well as multiple community resources that you can reach out to if you need help with your taxes this year. John, thanks again for being with us.
Thank you for having me.
And let's get John an oil change. His car has taken a beating.